It's no longer prudent to keep a large portion of one's wealth in US currencies and US debt. It is a proven reality that this situation will only worsen as time goes on. There has been zero increase in earnings for the 490 companies that make up the S&P 500 over the past 2 years. Those 10 stocks are all. Rarely has there been such a concentrated ownership of just 10 stocks. A tiny door will open up as soon as the plug is pulled. Therefore, you need to know what it is before you go. Here on Silver News Daily, you are observed. Become a subscriber to get more. These days, the US shells out around $3 billion daily. My curiosity piqued. Rely on that. This isn't a developing nation whose economy is collapsing. It is the issuer of the world's reserve currency. And yet, wow, we're totaling $37 trillion in debt. My God. Here is $14 trillion of it that has been added since 2020 plus a little. The United States is now formally a banana republic, according to Michael Pento. This is no longer being exaggerated. There's no way around it mathematically. The debt bomb is getting louder by the day, and when it goes off, the consequences will be measured in silver ounces, not in GDP. Something far more significant is simmering beneath the surface, even as the media diverts attention to tech euphoria and stock market highs. Belief in the dollar is quickly dwindling as its foundational fractures become apparent. More debt, printing, and desperation are the only things that can keep the illusion alive while inflation stays sticky and the Fed is trapped. Allow me to explain. The investors can see. As this plays out, they are already putting their money into silver, and not just any silver, and other tangible assets. Silver in its pure form. Experts are predicting that costs could soar over £50 and possibly even £100 in areas where premiums are on the rise and supplies are running low. As the stock market bubble pops and the currency deflates, Pento predicts that the price of gold might fall to $500 per ounce. Time is of the essence. The evidence is crystal plain, and the indicators are all around. What led us to this point then? Furthermore, what is it that is going to cause silver to go boom like never before? Trust me when I say that this is just the beginning of our tale. The United States, I've said for a long time, will become a banana republic. The truth is that I have foretold this for what seems like decades. We are no longer making predictions. Rather, we are only stating that it has arrived, as I mentioned in a commentary not long ago. Here it is. On top of the $3 billion in interest payments per day, you have a debt of $37 trillion. Since 2020, the debt has increased by $14 trillion. Absolutely insane. Totally unbelievable. There was a $291 billion deficit in July. That ranks as the second biggest July deficit in US history. This is taking place after the economy recovered from the recession and there is supposedly full employment. Thus, our nation is a banana republic. I often mention this because people will accuse me of being anti-Trump, but there have been some changes with the administration recently. Even on her best day, Kamala Harris is no match for the man, yet I still didn't vote for him. However, I can almost guarantee that my statement will offend everyone. I am not a fan of his work with the Federal Reserve or the Bureau of Labor Statistics. Both of those establishments have serious pervasive issues. However, the president is criticizing the exact reverse of this. For example, the Bureau of Labor Statistics consistently overstates the initial number of unemployed people. All the while, they fail to adequately consider the initial assertions. After that, they make significant revisions to them after the fact. So if you wanted to hurt the administration's reputation, you could have them release a terrible number and then revise it upward on the first Friday of every month, when everyone is so fixated on that day. Take my word for it, I have no political affiliation. Making money for my customers is my only goal. This is simply me attempting to be forthright. Politics isn't my game then. My background is not in politics. Therefore, I will back the president whenever he does a good deed. Furthermore, I will expose him when he does anything really terrible. Similarly, he is strongly criticizing Jerome Powell. Most importantly, he is not reducing interest rates quickly enough. However, the fact that the Federal Reserve is consistently providing the public with a positive real interest rate is not the issue. Negative real interest rates have been persistently created by the Federal Reserve, which is a major concern. And for the better part of 2 decades, it has been a negligible rate, hovering around zero. Additionally, the real rate is extremely negative. The United States national debt has grown by an unprecedented $1.4 trillion since 2020. It's more than just careless. A fiat-based economy would be doomed if it did this. And now that the national debt has exploded to $37 trillion, the dollar's very basis is trembling. The debt is more than a mere statistic. It eats away at the financial system like a parasite. The purchase value of borrowed dollars is rapidly declining, prompting investors to seek solace in anything restricted, genuine, and substantial. Thus, silver isn't merely going up in price. A hunter is after it. Worldwide, faith in the United States' fiscal restraint is dwindling as interest payments continue to spiral out of control, currently surpassing $3 billion per day. And when people lose faith in a currency, it also loses value. Borrowing to pay interest on its existing debts, the Treasury is maintaining trillion-dollar deficits just to stay afloat. This is a downward spiral that does not constitute fiscal policy, and everyone is looking on. The world is shifting away from the dollar, central banks are cutting back on their exposure, and the wealthy are preparing for the inevitable full-blown currency catastrophe. Trust is the key to the US dollar's supremacy. Rely on the government's track record of handling debt, inflation, and maintaining long-term stability. The story remains unchanged with each passing quarter, though. There is absolutely no escape route, accountability, or control. If the world's reserve currency begins to decline, where would investors go to park their money? Into scarcity, into metals. Additionally, silver is emerging as a viable alternative to gold, which has underperformed so far this year by more than 10%. For the simple reason that silver is readily available, inexpensive, and greatly undervalued in comparison to gold in history, while gold is both expensive and scarce. The headlines won't entice investors. Changes are occurring, and the dollar's precipitous depreciation is speeding up the process. This isn't something the Fed is merely observing, though. They're in a tight spot, and their next move might ignite a fire in silver. When it comes to the Federal Reserve, I am at the forefront. I will be at the forefront of any confrontation with the BLS. Completely requires a redesign, but for reasons that run counter to the president's claims. Since the nation is bankrupt and the central bank works for the administration, it's safe to say that Banana Republic is the first thing that comes to mind when one thinks about the country. This is our final destination. You asked, and I will answer your question. I appreciate you allowing me a little more leeway, but I want to guarantee that the audience gets their money's worth. They may receive value for their money. My position in the market remains long. I have a long net worth. I have not lost any money. Here you can find a selection of foreign stocks and precious metals. We have defensive stocks available. We've been riding this bubble for a long time, but it's about to pop. I'll give you 2 reasons why. First, the fantasy is coming to an end, and then reality will set in. Here are 2 reasons why I will give them to you. First and foremost, there is a failing economy and a splitting labor market. That cannot be debated. This is understood by all. This is not dependent on anything. Rather, it is an objective fact. What if the Federal Reserve doesn't cut rates significantly enough to stabilize the economy and earnings per share? Wall Street would be greatly disappointed if Powell is unable to do so, especially in light of today's producer price index inflation numbers, which are well over 3%. I have every reason to believe that this will continue. The market would then crash as a result. I prefer to call whoever succeeds Jerome Powell an obsequious sycophant, but I really believe the most probable outcome is that we do see substantial rate decreases. That story is from May of 2026. The same thing will happen in 2024 when they lower interest rates. As a result, long-term rates skyrocket, while the Fed funds rate, the rate applicable to money markets, cuts. The exact events of 2024. Investors may lose faith in the bond market if the Fed plans to aggressively lower rates at a time when inflation is spiraling out of control and wreaking havoc on the middle class. Rates on mortgages, business debt, auto loans, and student loans have all recently spiked. the market would fall much more precipitously and more sharply as a result of that. There is widespread knowledge that the Federal Reserve is in a bind. The Federal Reserve gave in to pressure in September 2024, after years of raising interest rates to rein in inflation. They slashed the federal funds rate back down to 4.75%, 5.79%, marking their first rate drop since 2020, in response to persistently high inflation. The outcome? A metric troy ounce of silver now costs more than $31, almost immediately. The market realized the reality the second the Fed shifted its position. With the end of the tight money era, the dollar is in a precarious position. Michael Pento warned about this very hard circumstance. The bond market is about to crash if the Fed continues to raise interest rates. However, lowering rates? Inflation is already on fire, and that would be like adding fuel to the fire. Both roads end in tragedy, but only one will lead to the soaring of silver. Also, the Federal Reserve picked it. At this point, it is irrelevant whether they will cut again. The level of aggression is key. The Fed is out of options due to inflation's stubborn refusal to drop below 3% and the impending prospect of new tariffs. There are red flags in the bond market that might lead to a complete loss of trust in treasuries if long-term rates were to soar at the same time the Fed were to ease. That's the worst-case scenario for the dollar, while silver is ecstatic. Since silver becomes more than simply a hedge when real interest rates go negative and the dollar weakens. You can't do without it. Silver, in contrast to real estate, bonds, or equities, is not based on trust or debt. Both inherent worth and scarcity form its foundation. And when money leaves the system, silver is the safest way out. This is happening in real time, and investors are taking notice. The wise money is already making plans for what's to come, even while Wall Street is still nauseous from tech excitement. The process begins with actual silver, as opposed to contracts made of paper. Not exchange-traded funds, authentic money in the form of bars, rounds, and coins, in which rates are going increased and supplies are getting tighter every week. The percentages for platinum and gold are around 4.5 and 4, respectively. And I intend to raise that, though not right now. You know what? The gold bull market isn't really a mystery. Over the last quarter of a century, it has beaten the S&P 500. And thus, the bull market has been going strong for quite some time. You can't have it all, which is why I own 5% of it instead of less. And I'm referring to paper gold in its liquid form. This has nothing to do with having 5% gold on hand has always been my recommendation. In that case, you should begin. Plus, that will be passed down through generations as a treasured possession. But if you're interested in discussing liquid paper gold, the current value is 5% due to the fact that our nation is bankrupt and its currency is losing value. Depreciating not just against other defective fiat currencies, but also against physical assets. Next year, I anticipate a significant rise in that. Just like I mentioned before, if the long end of the bond market gets extremely intractable and rates start to soar, it will also impact gold. So that's my tiny qualm with this. It won't damage Bitcoin nearly as much as it will the S&P 500 and big league tech, but it will hurt them nonetheless. The large bubble in that Mag 7 is located there. There everyone is confined. Companies like Apple, Google, and Amazon come to mind. The fact that they are market capitalization weighted indexes means that passive funds can pour into these equities without lifting a finger. Had we not seen any increase in earnings from the 490 companies that make up the S&P 500 over the past 2 years, we would have. Those 10 stocks are all. When compared to the other 490, the concentration of ownership in those 10 stocks is unprecedented. So, you're in a huge bubble with a tiny hole for escaping through when the plug is withdrawn. This means you need to know what it is before you go. This is a recording that took place on Thursday night, as previously said. For the time being, this is not true. Don't think I've lost interest. However, if you were interested in trying to get, and I will reiterate that I will not make an educated guess today, and then hold myself to it because I am here and working every single day. No need for me to make a pact with myself to sell by the 1st of September. But that's a reasonable amount of time to wait because of seasonality and because based on my estimates, inflation will be running high in the next few PPY and CPI readings. Also, I still think the Fed will hold off on a 50 basis point rate cut. You recently had Treasury Secretary Besson on the show, and he wanted a rate decrease of 50 basis points immediately, and a total of 150 to 175 basis points in a relatively short period of time. I know he tried to take those statements back today, but that's still his intention. You had best be at the forefront of keeping a tight eye on those systems, because if you don't, you're going to ruin your retirement if you don't. If you trash the dollar and the bond market, then I think it's over for stocks. Silver has progressed beyond mere ascent. It's picking up speed, with physical demand at the forefront. Silver prices surpassed gold by a significant margin in 2024, skyrocketing by more than 43% and going beyond $35 per ounce. Although the spot price is certainly having an impact, it isn't the only factor. The premiums on actual silver are great. Speculators aren't sitting around hoping for approval from Wall Street. At prices that are rising above spot, they are purchasing rounds, bars, and coins. The supply is still inadequate. Consider it. When were the last times silver premiums climbed to this level without causing a widespread economic meltdown? This is not occurring due to a lack of courage. Fundamentals are the reason it is occurring. No one, not even the most seasoned metals merchants, can keep up with the depletion of the actual silver market. Demand is showing no signs of abating, even as online stocks are shrinking and wait periods are increasing. Why? This isn't just conjecture, you know. Just staying alive is the goal. As the price of silver approaches its 14-year high, predictions for the year 2025 are becoming more explosive. Price breaks are being predicted by analysts. We're a £50 match, £38 each. After a few months, motivated by science, not rhetoric. Sales are on the rise. There is no change in supply. Silver becomes the clear front runner when you consider a depreciating currency, declining real returns, and a complete collapse in faith in financial assets. Not to mention that this is only the start. The more money is printed, the more rate cuts are announced, and the more inaccurate inflation reports are, the more people will gravitate towards silver in its physical form. Although the COMEX determines the paper price, the actual market activity takes place in safes, vaults, and delivery vehicles. At this very moment, the premium is making its narrative known. When everyone sees that silver isn't merely under demand pressure, though, what will happen? Also, supplies are becoming low. Nobody can see what I buy or sell. Their decentralized nature and immutability make them ideal. That is not the case when the currency is linked to the US dollar and the US Treasury complex. Your identity is well known. I believed these items would be rare and a hedge against a weak dollar because they are tied to the currency and they know you hold them. Therefore, it runs counter to all the reasons why these cryptocurrencies are valued. Thus, it is my perspective. Why would anyone want to associate their cryptocurrency holdings with the dollar and a treasury bond anyway? I believe the hype surrounding these assets is completely exaggerated. You're going to be utterly disappointed. A lot of money is under my management and I am well connected in the industry. I seriously doubt that anyone cares about this. It's a tiny, obscure demand that won't provide treasuries with much supply. Absolutely not, in my opinion. Our official Silver News Daily Telegram has just gone up, so we'll be right back.